Hello and welcome to The Trade. Before we get into the technicals, a quick look at what traders are watching. And weekly jobless claims unexpectedly fell in the US, reinforcing signs that the labour market remains stable. Meanwhile, US existing home sales unexpectedly fell as tight inventory boosted house prices to a record high and Middle East conflict kept mortgage rates elevated. Markets continue to price in a 25 basis point Federal Reserve rate hike by December following recent hawkish policy signals. And US bonds rallied after a sell-off with the 10-year yield at 4.537%. That is after hitting a 10-week high on Wednesday. Looking at currencies, the greenback little changed, but we are seeing the Aussie dollar holding around 69.5 US cents. Let's get into what the technical signals are telling us, and Thomas Atkinson from FX Evolution joins me. Great to see you, Thomas. Let's kick it off with what we're seeing in the NASDAQ, particularly amid all this hype about AI, SK Hynix pricing for its American listing as well.
Yeah, a lot of information coming out in the US at the moment when it comes to all of these stocks, of course. One of the things that I think has been most interesting probably about the last month, though, has been back to the options markets, and also the fact that we've been seeing a lot of rotation. So about a month ago, everyone was just talking about semiconductors and technology stocks. And then we fast forward to where we are today. We're still talking about those things, but actually the undercurrents under the market have shown so many new sectors rebalancing. We had outperformance in biotech, healthcare, and other sectors actually performing better on the charts. And that led into a bit of, I guess you would say, volatility in the markets on the NASDAQ. And here we have a chart of the NASDAQ, and we've just come back down to what we're showing there is a put support potential. And the reason that 700 level on the Qs, which is the most traded exchange traded fund for the NASDAQ in the US, is so important is we're seeing so much open interest around this area. So basically, it's acting as kind of a level of partial support with the options market. And we've seen a few bounces off this level over the last month and a half. The other thing that's really important to viewers out there will be that we've got quite a lot of transactions that have come in both at the highs, that is the 750 level for the Qs, and the lows here at 700. So it's a really balanced market in terms of, we're trapped in a range, or as we call it, a pullback in time. But for now, this week, we've tested 700 again.
What about our market? I feel like a broken record every week, Thomas, when I say the S&P ASX 200 is unchanged year to date. Have I lost you, Thomas? I just stumped him with my amazing question. Are you still there, Thomas? Okay. We'll take a short break and try and re-establish that with Thomas. I thought my question was just too good for him. We'll be back in a minute. I was just saying, what about the technical levels for our market? Because I do feel like a broken record every week saying that year to date, the S&P ASX 200 is unchanged.
Yeah, year to date it is unchanged, but actually financial year closed, I think the ASX did a little bit over 6%. But what was probably most interesting about that was most of the gains actually came from really two stocks, and that was BHP and Rio. I think BHP may have made up, correct me if I'm wrong, with something like 80% of the gains of the actual ASX. So just goes to show the weighting of this market and how important, like often Commonwealth Bank and BHP are to the ASX 200 in general. So you are, I guess we're all a little bit of a broken record when we're taking a look at this market. It's seen a lot of transactions at around the 8,500 area, as we note here when we look at the volume. And then we've got, of course, some strong resistance that's sitting at around 9,000. and pretty strong support that's at about 83 to 8400. So look, it is quite trapped, but part of the reason for that has been rotation. And rotation seems to be what most people are talking about in stocks right now, because there's a lot going underneath in terms of single stocks, but it's not affecting the indices as much due to weighting changes.
Yeah, I want to drill down into some of the stocks you're looking at in a moment, but let's just first have a look at commodities and I guess what's driving oil, and then taking a look at how that's affecting Santos as well.
Yeah, so oil, of course, has been in a significant decline now for the last couple of weeks as we saw tensions ease in the Middle East, and that led to some significant breakdowns in the technicals on the charts. I think last time we were talking about the 84 level, 85 level for oil being pretty important, and when that level was given up, that is that markets pushed lower, it started to really capitulate. So the markets effectively fell a huge amount all the way down into the low 70s and 60s. And one of the things that we've seen this week is, of course, re-escalation of some tensions, and that led to oil bouncing back up. And we've highlighted here one of our favorite moving averages on the charts that it's always good to have as a technical analyst, which is the 20 daily moving average. And what we've found so far is that it's come up to this level twice on this way down since around June, and it's basically sold off each time. And we've just recently seen it pick back up to that level, find a bit of resistance. But the difference this time is that we are starting to see small time frame structure. We have a saying at FXE Trading Academy, and that is that to stop a freight train requires market structure. So it might be a bit of time before oil can stabilize, but it has had a very large fall, and that's led to oil barrels going down, but actually oil stocks still consolidating at relatively okay prices compared to the barrels.
Yeah, okay, well tell us then what Santos is doing on the back of that.
Yeah, so Santos has been in a multi-year, you probably talked about this one a fair bit as well. It's been sitting at around the same level for years, and viewers will see this as it is a chart that has been at the same resistance level multiple times over the last 4 years at around that $8.20 mark. And what we've seen is that the tension rising this week has also pushed up Santos a little bit. It hasn't quite gotten to that 820 level, but it's one that we're watching as technical analysts, because if we do close above that, that would be a multi-year breakout. And often in the world of technicals, these are considerable levels, because the longer a market stays in a range and then breaks out, often the more significant that breakout is. So we'll be watching Santos over the next coming weeks just to see whether something changes there. But yeah, some positive signs, I guess, going back up to that level.
What about gold, Thomas? Because it's kind of interesting how it's been fluctuating so much despite all the geopolitical concerns. What are the technicals showing us as to whether or not we get back to those records?
Yeah, so gold was a very interesting one. We've followed it here on the show for years now, and in January it became a little bit too hyped up. People were lining up in the streets trying to buy bullion, and I think bullion was selling at an extreme spread over just even spot price. But what happened from that is, unfortunately, the inevitable thing is when everyone gets crowded into a trade, if that then becomes overwhelming, we often get extreme levels of volatility. So I guess the question is, from the fundamental side, has the central theory changed behind central banks buying it, and of course all the other things that make gold good? From the technical charts, though, I guess the good sign for maybe the gold bulls is that we've fallen enough to get to 1,000 level. So we've fallen down to the 4,000 level, and what we've seen here is a bit of a change in the markets. That is that it was pretty much steadily just going down, lower lows and lower highs. And we'll note here that, again, the 20 moving average is coming up with those highlighted 3 circles. But basically the market hit 4,000 and it's found some pressure. Somebody seems to be a little bit excited about that price because it's rebounded twice off that price so far. And on the weekly, if you load up a weekly chart, it kind of looks like what we call a technical tweezer. So gold finding some levels of preliminary support, and the 20 daily moving averages and 4,200 level is the next level that we're watching on the charts for potential signs of bullishness. So it's actually improved a little bit in the last week and a half.
A technical tweezer, I haven't heard that term before. Is anyone technically tweezing CSL?
No, probably not.
Just trying trying to find a
segue. So what you're looking for generally with the tweezer, by the way, is large wicks. So I always like to say wicks in charts hold excitement of the market, because if there's a price that gets reached and then all of a sudden something changes in whatever that's happening in the markets, and then all of a sudden it rallies back up, that's showing that there's a huge movement at that level, and usually that shows somebody has strong conviction, and that's what you're trying to do in charts. You're trying to read the psychology. So with CSL, it's been in a steady decline now for quite some time. Pretty big underperformer, obviously also hurting the ASX 200 in many ways in terms of index rebalancing. But it's fallen and it's come back to just underneath that big psychological level of 100, because of course we had multiple $100 levels from CSL over time, but 100 is always one of those round numbers that a lot of people pay attention to. Turns out if we go back through the history of the charts, we end up finding the $100 area previously had a bit of transaction at it. I still remember that actually when it all happened back over a decade ago, and effectively the market has found its first level of some buying pressure. Now it's had a couple of these, so it's early days, and it's done so far is come back to the weekly 20. So we talked about the daily 20 on the other charts. This is the weekly 20, and we call that mean reversion. So basically it's at resistance at this point on the chart. So a little bit of pick up, but it's way too early to tell on CSL. I just thought it was an interesting chart.
Yeah, Thomas, almost out of time, but you also wanted to have a look at Xero's technicals. What's it showing us?
Well, I guess Xero, it's come under a lot of pressure over the last 6 months in particular, and this is partly due to semiconductors and the AI trade being so dominant and popular, hurting a lot of software businesses and everything to do with them. So I just wrote 1, 2, 3 here, and that's because what's been happening in recent times is the market's been making lower lows, but it's been doing so with not that much extra selling each time. And this is what we often call the preliminary stages of potentially a Wyckoff pattern. So I'm highlighted there that little wick rejection in the yellow. And the only reason I've done that is because if we get past that level, it's hopefully showing that maybe Xero is stabilized. So at this point, it's been selling very aggressively, but that has slowed in recent times.
All right, Thomas, always a pleasure. Thanks so much. Thomas Atkinson there from FX Evolution. That does it for this edition of The Trade. Be sure to join us next time.